It's time. Trash Trades is back. Did we do this voice last time? I don't remember.
Uh,
I don't think so.
no.
I did it before though.
Yeah, we did some sort of bullshit last episode.
1000%. All right, guys, what's up? It's us, fucking Luca,
How you
fucking
doing,
me,
guys?
VJ. I'm here in a near empty apartment. Actually, it should be more empty. I'm very stressed. I gotta move. It's gonna be a lot better, but moving sucks. And I just have my setup pretty much set up for this. I'm not even gonna trade tomorrow. Should keep me from any trash trades I might be,
Potential.
potentially able to do in a moment of weakness, being pissed off that I have to fucking move. If it sounds a little bit like an echo in here, good. It means I did a good job.
There you go.
Oh yeah, we're not even talking about trading at all. Look at how you doing, bud.
I'm doing all right. You guys already know. Trading's a little interesting recently. I'm not gonna say tough. I'm not gonna say good. It's interesting. Still paper trading.
It's
This
been
is
tough.
my fifth week. Now it's just past 5 weeks of paper trading. I'm enjoying
Really?
it. I'm enjoying it. Yes,
Has it really been 5 weeks?
it's been one, two,
I thought it was like
three.
2 or 3.
No, it's been four. Four on the dot. Four on the dot. Um,
Mm.
four since yesterday. I misspoke. So a month paper trading, and it's good. Honestly, I realized a lot of things about my trading. You know, I'm not entirely consistent as I should. So there's no point really to get off paper trading until I do find that consistency. And I decided to spice it up, as you guys noticed, some ICT inspo candlestick colors. You guys sort of feel
Mm.
this the color vibe. You know,
Beautiful.
the classic green and black. But it's a nice way to spice up my chart. Try to develop a new stage of my trading.
Oh
New
my god,
stage,
sorry
new
about that.
colors, new VJ ringtones. And in this case, I feel like this was a not well. I'm gonna explain more of the trade later on, but I feel like paper trading has absolutely opened my eyes to the truth. I feel like I've been absolutely lying to myself for a long time. I really have to just see myself, control myself, learn about myself. And I don't think there's much of a better way to do it except paper trading or backtesting, because I'm sort of developing myself in real time, and really taking away that sort of tendency for like needing a price target or needing a P&L. There's none of that anymore. So it's really a test of your discipline to stay consistent and try to find, you know, consistency. How's your trading, Beach?
Absolutely. My trading has been a lot better lately. I've been really focused on the process of being a great trader, and not about, when you think about just the overall like dynamics of being a trader and like how hard it is and other
Mm-hmm.
people's warnings, and then those warnings like sort of coming true. Like
Yeah.
sometimes that's beneficial, sometimes it's not. It's in a way it is beneficial because it sets you up, but like I'm experiencing a lot of things. I know how things are, but then pretty much everything that I'm good at, like not many people are good at. A lot of it had a lower success rate than this. Um, and so, like, whenever we look at certain things with like too much reality and not the real reality of like, if you just buckle down and do the work,
Mm.
and a lot of the unsexy work, like, which could include paper trading, which could include journaling, which has transformed my trading, um, and really taking data on myself. I mean, you see how insistent I've been on that. Probably even before that, I'm like, oh no, you got to study and like really understand these models. After that, I'm just like, you need to understand what you do. Period. Whatever your model is, like, what do you do with it, and gather that data so you know for sure if you can even
Absolutely.
trust yourself, and then
Yep.
and then go in on that, and then like I could be a bit more scientific even with my journaling and whatever. But just the fact that I see it there and I know that if I just wait for like the most obvious setups when I clearly can sort of see what's going on, rather than a maybe or I might miss this move. I just am just trading in a much better headspace, and I take these moves, and so many of the times I leave points on the table because I'm trading with light size.
Yeah.
Maybe I trim too early to just avoid risk at like the earliest thing, and it might even reduce my win rate more than it should be. Those are things I definitely need to work on in
Interesting.
terms of holding even better. Even though I hold for a lot of points, many times hundreds of points, but still sometimes I notice like I still take the earlier ones out a little bit too early, and might as well just be okay with just like taking the loss. And I can just sort of see as I'm more disciplined and I can see those trades pan out, how I can take those chances to do that, especially with like, taking trades that should generally have low risk and just being patient for that. And then, if you lose, you lose. It's no biggie. And then if you win, it's no biggie. You just move on towards your goal. So
There you go.
I've been doing better with that. There was a couple trades this week where I was a little loose on the initial parts of my entry. One of them was insisting on being like in the trade, even though when I'm moving from my chart to the TOPSTEP X platform, I was a little slow and it sort of moved and not just waiting for another entry. But then when it got to a place where I would have entered, I added, and then like my entry sort of leveled out because I sort of went in light knowing that I was doing that. But then it still set me up to trim early because I
Interesting.
sort of felt the shakiness when I got in. And I think I got out at about like 70, 80 points, and it went 318 points. I even got back in and made like another 70-ish points, and then like bounced back, and because I'd already grabbed that, and it just like I already had this sort of shaky feeling and sort of forgot like my initial thing. I had all the targets that I was sort of looking for, just sort of forgot. And
Yeah.
then look to get back in. And of course, I'm in the middle of a move and a little distracted, but like, a lot of people like they make the money and they're like, yeah, we got that. Me, I prefer to just be better, trim better, learn better. You can get a lot of lessons and losses. Many times you can get lessons and wins too. So I try to learn and just, we're seeking to get good
I mean,
and be
listen, as long as
profitable.
you're see, as long as you're learning and you're progressing and you're developing, I feel like that's the most
Yeah.
important part. I mean, listen, 70 points, 80 points is still quite good. Of course, you always miss moves. Every day you miss moves,
Yeah.
but it's something that's
Yep.
inevitable. As long as you get that daily goal, that's really what counts.
Yeah. I don't even think I hit the daily goal on my accounts, but well, I think I did on one. I think I got a little bit less on the others, but it's okay. God bless all traders, and let's roll the intro.
Order filled.
Damn.
Caught
Here
me
we go.
sipping.
We're back at it again, man. Honestly,
Caught me
some fucking
sipping. We
bullshit.
should make that a t-shirt. We should make that a
Coffee
t-shirt.
sipping.
Yeah, caught me sipping. No, caught me sipping,
Ah,
and then we put a coffee mug on it. Someone's gonna
okay.
steal that idea, but no one listens to the show.
Yeah, it's not for real.
No one listens to the show, so that's fine.
Anyway,
We're good.
listen. This was a great trade. Absolutely nobody's paying attention to, which is a great. It was more of an overall time frame bias. Okay, so we were rapidly moving down on this 5 minute. Continue down quite rapidly. I think this was more of a rejection from this this high here, and we were distributing down. So I was trying to catch a bit of this downside. And you guys sort of know my trading style. I try to find a fair value gap in discount, and then I'd target relatively equal lows. And these relatively equal lows I try to target because these are forms of liquidity. It's not a big low displacement. It didn't sweep a lot of liquidity. These lows with very small wicks like this, I regard as weak lows. Looking for these lows to potentially be taken out in the future. So I found my more of liquidity target, my price target for this trade, and I wanted to try pinpoint an entry, which I found one right at this 5-minute fair value gap in discount. If you draw a fib from this high and low, or even this high, we are in discount with the fair value gap. So technically, it ticks all my stuff, right? I have that confluence, I have that discount, have that price target, and it's more about myself staying disciplined for an entry. And this was a very interesting trade, because there's a couple lessons to be learned. The first pre-trade analysis, I don't think there was anything wrong, right? We sort of, I planned out my trade, I was patient, I waited to it, for it to actually tap my entry, and then I was looking for a movement down, which we got, etc., for an entry. So I don't think it was super wrong. And this was more about managing my trade in the future. So I'm going to play a couple candlesticks. You guys are going to sort of see, and then I'm going to explain candlestick by candlestick on how I managed this trade. So I entered at this candle as soon as I saw more of a displacement. Stop above here and a take profit at these lows. This is a 1-minute chart. And initially, Jesus, it went quite well. We sort of got that move into my direction. We got more of a pullback and then a movement up here. So this was actually my original stop loss. And more of when we saw these candlesticks down, I decided to actually protect my risk. So I moved down my stop. I'm sort of experimenting with trailing stops, etc. for paper trading while I paper trade. So this was more of a trailing stop decision. And I placed my stop loss right around here. So this wick of this 1-minute candle, I decided to move down my stop. So securing myself some risk by moving this stop loss. And a couple candlesticks later, I got stopped out. I exited my position right around this candle. I think this candle was pretty fast, so around there. And then it proceeded to sweep this high for relatively equal liquidity building. Something I mentioned a couple candles or a couple episodes ago of sort of that liquidity thing that I've taught myself. And we soon enough, I think we did hit the target. I'm pretty sure. Yes. Okay. So this was a well mapped out trade. It was really that managing the trade for me, because I feel like I did everything correct. Like if before I hand it over to VJ, if you sort of look at the overall trading plan and everything, I think it was done quite right. You know, I had my daily bias. I was seeking lower. I found my price target of relatively equal, or a liquidity price target of a week low. And then I proceeded to look for an entry. I was disciplined. I waited, patient, extra attentive by waiting for the move to actually go into my direction before entering. And I just think it's a poor management of this trade. Unfortunately, I decided that this small move here, was enough for me to move down my stop. And unfortunately, that eventually turned out to be a wrong decision, because I quickly got stopped out to form relatively equal liquidity, and then we moved down into this weak liquidity low here. And yeah, listen, I'm a directed some VJ analysis. I just think it's that managerial tendencies that I have of a super secure risk management that I feel like is in turn not allowing my trade to breathe. VJ, what do you think?
Where's your original? You nailed it on the dot. That was definitely one of the problems. Where's your original stop?
Above this high.
Above the high and the fair value gap.
Exactly.
Is it right at the high of the fair value gap, or is there a little bit of...
It's right there.
Okay, and then it doesn't get hit.
It does not. If I kept my right.
It's a higher time frame fair value gap. What time frame are we on?
This is the 1 minute chart, and this fair value gap was a 5 minute fair value gap.
Okay. Yeah, and some discount that leg, and if you sort of look over, like there might even be like a little breaker situation. There's a lot of stuff overlapping there. The
Mm-hmm.
idea is good. The stop even there might be a little bit too high, a little bit too close. Like if you put it over those like the bodies, like just over the order block, even.
Like here.
Yeah, yeah, that's probably like I would at least give it that breathing room, just so like because many times, especially a higher time frame fair value gap, it's gonna wick up, and
Yeah.
it could wick up on the 5 minute. That could be even like a 1 minute close over, but
Mm-hmm.
maybe not that aggressive a close. So what's the RR in the trade right there?
So the R with this stop loss is 2 to 1, and with my original stop loss it was at around 2.5.
Right. So, still around the same. I would say like this whole trade obviously like the idea is good. It's based on the higher time frame. It ends up playing out. The thing is like it's something that it's there's like two things that all like beginning traders like tend to do. And then like as traders get good, especially early on, I think we've both done it. I know I've done it, and I know you've done it because we've seen so many of our losses, right?
Absolutely.
Where we try to time it perfectly
Mm-hmm.
rather than understanding like we may have very good idea in where the market may go, but we only have like part of the puzzle and an idea on the time. And so our timing must be appropriate. And if at times where it looks like sort of shaky, it's coming back, it doesn't necessarily mean you're wrong. It could mean that you are simply mm, like early, or it needs to just it's generating liquidity and stopping out essentially weak shorts there.
Mm-hmm.
In your case, which you had a good idea, but then you were weak in shorts. Why? Because you started to get antsy. You started to get worried about the initial risk you put on, which you had already agreed to put on. And this is
Yes.
why I was telling you I don't like trailing stops very much, because in these type of trades, especially like OTE type of trades, it'll come and test you. Yesterday, I saw a fair value gap get hit for the third time and make sort of a three drives pattern broadening formation situation, the fair value gap, and I almost longed, and it instantly made a manipulation push that was like 70 points. Like it was like literally everything yesterday, and honestly started today was right around like 70 and shit. And I didn't take it, but it was because it had done that and kept sweeping, but holding the fair value gap, that I was like, if it's going to go, it's likely going to go now, and it may not go. And there it tested twice because many people will get into a trade and be like, this is the one we're pushing. Stop to break even. Oh, I got stopped out.
Mm-hmm.
Okay. Oh, this is the one. Stop to break even. Oh, I got stopped out. Okay, what's going on here? And then it does the real move. It sometimes only has to happen once, as it does with you, and then it does it again, and then you sort of not seeing the setup enough or paying attention to it, don't realize like even if you had put it at break even, you could have just got back in. And in a way, also in this particular case, your entry is like too delayed. If you want confirmation, you need almost like more confirmation than that. Like let it break a low and then retrace so it doesn't have to come back on you. If you were going to enter on that fair value gap, if you just entered on the fair value gap, not only is your stop tighter and you could put it at that not above the order block but the high, and then you could just deal right, and then when it comes back, you don't even see negative. You're at zero.
Mm-hmm.
And so that's why, like on the 1 minute, having confirmations like that, they always kill me. And nowadays, I just let it go to like try to break structure, break another low, and you can see when it breaks another low, it retraces into a fair value gap, into there, then put your stop at the new high, because then it ran stops again. Look at the low that's in the middle of the two highs that were made, and then see how they gets broken. and then you see it retraces like sort of into that order block, and I think there's probably another fair value gap up there where it stings, but definitely
Right here.
boom. So you could enter there, then stop at that new intermediate term high, which was made in that fair value gap, and it's also an intermediate term high. Now, yeah, you can put it over the fair value gap, or the other one, and then look at the RR. That's a true confirmation type of setup.
Mm-hmm.
But instead, you just waited for a couple candles, and you're like, "Oh, that's displacement." True displacement should also have a form of a market structure shift, whether it's closing with displacement over a low or a high, inverting a fair value gap, or some PD arrays, or causing a change in state of delivery, store formation or order block. It should have a form of displacement or lower time frame displacement. If it doesn't quite do that, because like where you had entered, it sort of inverted that fair value gap, but not really with displacement. Not in the same way that when it came down there, made fair value gaps, inverted another one, broke lows that it made on the way down, then retraced into the fair value gap into discount of that most recent leg.
Yeah,
That's more convincing.
I
And then
agree.
you would got even a better entry than the other one. You just have to just stay patient. And if it goes without you, fuck it, dude. You missed it. Or if you get in there, you should put your stop where it should have been, like above the order block or whatever, and you just deal with it. And you're like, yeah, that's my risk.
Yeah, and
And then you realize it's not the best entry, but you have the right idea and you're willing to take that risk because for the reward, it's okay.
yeah, I think there's definitely other entries. Like in all moves, there will be some smaller time frame entries that you can enter on, like this order block, etc. I feel like more of the staple for this trade, and more of a thing in general, which is I I believe that I did quite a lot of things correct. I think I did probably 8 out of 10 things very correct. I did a good plan. I had a great entry idea. I decided to wait for a confirmation move. I had my daily bias finished. I really planned out this trade before it actually happened. The only problem is, I feel, is that once I'm actually in the trade and I start to actually feel the weight of the trade, I decide to take it upon myself to actually start moving my stop loss too abruptly. And I feel, because as much as trailing your stop can be beneficial, this small move in my direction was no excuse for me to move my stop from up here to all the way down here. This was basically me saying I'm okay by being stopped out because I'm really not letting my trade breathe. And unfortunately in this case, if I would have kept my stop here and I would have stayed disciplined and not let the trade actually put the weight onto me, and cause me to be emotional, this trade would have actually executed quite well with a great risk to reward, a great plan, etc. I feel it's just about me managing the trade that is my problem. It's me interacting with my stop loss and me trying my best to secure the trade, and not let it breathe and play out. And I feel like that's just one of the things where it's sort of difficult to get by.
Everything you said is absolutely true. And just like you said, it's like 8 out of 10 things you did right. That's absolutely true. The two things you sort of did wrong were the execution. And
Yeah.
the two places were the first of all, the entry. Second of all, the stop loss trailing at the wrong time.
Mm-hmm.
So the entry, you wanted extra confirmation on that fair value gap. That's fine. But now you have to wait for essentially a full other entry mechanism. And there's many. You can wait for, whichever ones that you're used to, whether it's like similar to a 2022 ICT mentorship, which that second one that we went through was. You could wait for like the inversion of a fair value gap that you like after a sweep that seems legitimate to you, which often that second tap of that fair value gap is often good. it makes a shallow run into the fair value gap. Then
Mm-hmm.
it takes out stops and more fully rebounds to the fair value gap and goes. There's entire models based on that. It's very common that happens. And that alone should remind you, like, why if you enter on the fair value gap, enter on the fair value gap. Because if you had entered up there, you don't even see red. So you probably wouldn't have even cut.
Yeah.
You know what I'm saying? Might have even, or if you did cut, you could go and wait for another entry and follow it down. But instead, it's because when you took the trade on, this is why the data proven model is so important. Okay, you will know as you adjust your strategy. Maybe you start entering on the fair value gap and then put your stop where it is. That like, oh shit, my data gets better. My RR is better. My win rate goes up because I'm entering correctly, and I could take that risk of that fair value gap or that order block because it's actually smaller than the confirmation.
I agree.
But it's scarier. It is scarier because at that time when that thing is getting tagged, it's a full blown green candle going straight to the heavens, not stopping for anybody.
Yep.
And I enter on those. And I had to talk to Tom, who has been another show you guys should absolutely listen. True Profitable Legend. About like when I was trying to wait for an extra confirmation on an OTE, and I end up entering too high, and then it just goes back to the OTE where it was my stop. And this is something we've talked a lot about on the show since then regarding some of your trades, because this is exactly what that is. You put your stop in your entry, and it did not go anywhere. There was no displacement, no break of structure to be like, okay, we're out of this range. I can put my stop to break even. Or even a trim. There wasn't a monetary trim where it's like, okay, I took some gains. I don't want it to go red. At least that would have been like, okay, fuck it. So then you put it to break even. So it's like, that's why it's like, you got to be careful about that. And then like, if you're going to wait for a confirmation, don't let it be like that many candles. Like, as a matter of fact, I've seen people like take that next candle and then place a stop up there, and then they just have to be okay with getting stopped out and try again. Absolutely. But in reality, the people who do it right is like, if that is your entry up there in that fair value gap, might as well just enter it. If that fair value gap is small enough, or the high or low around it is close enough, or the order block that you could be like, you know what, I could sort of frame an entry and a stop loss here that makes sense and the risk is fair. And then if this fails, maybe I'll try again. Or you could even enter a little bit there. And then in the confirmation, enter some more. There's a number of different ways to sort of play with it, but you have to enter correctly to optimize it. Because essentially, and David Paul said it the best. Before I thought, oh, if you're right, you're just right. So you can just enter wherever and just hold through whatever. No. In reality, if you want to make it easy for you to stick around in plays, you need to, as David Paul would say, finesse the entry. You can have a whole plan, but the execution is actually what makes you profitable. So even though out of 8 out of 10 things you did right, this is like an exact map of my losing streak, where I wasn't exactly entering where I should, and it would be 10, 20 points away. On ES, maybe it's 2 to 5 points away. And then it comes back on it, and then you're like, what the fuck? And then it goes to exactly where you should have been. Even if you doubled your position, you're still not there. And then you're going to take on even more risk. It's crazy.
Yeah.
When you already knew. But you're just not doing it because the data-proven model, that's why you have to backtest. Because when you start entering there, and then you watch it play out, and you see it play out hundreds of times, day after day, and sure, you lose some, but when they win, it's no problem. It happens, and you win more often than you lose. Then it's like, I just enter there. Fuck it. You would never take. You'd be like, oh shit, it went. And all right, you know what? I'll just wait for the next entry, because this entry always loses. But the next entry, I get a few less points. It's better though, and it is. We just did the RR in it. It's significantly better. Might even have the best RR of any of the trades.
Yeah, I think it's very personal and dependent on your personality. Personally, I have no problem entering at a super turtle soup type of situation, like a massive candle and entering short. I have no problem with doing that. In fact, I've done it before. In this specific example, I really planned it out since the start. It's really important that as traders, you really have to see things. I don't know, Jesus, you have to see things as a third person. And in this situation, planning out your trades from A to B or from start to finish is really important. Taking 15, 20 minutes to really see, listen, this is the area I want tapped. This is the reaction from that area. This is the potential entry. And this is how I handle my trade. Every planning process is very important. And I think more of the emphasis on this trade is that I did everything planning wise correct. I waited for my entry. I had everything planned out. I planned the movement down, and it's more about the weight of actually handling the trade. Because you can do everything correct. At the end of the day, you can plan out your trade, get that perfect trade, the amazing entry, the great risk to reward, the great stop loss placement, the great risk management. But at the end of the day, if you can't manage sitting on the charts and taking the weight of the trade in the moment, you might as well throw all of the work you previously did away, because it's really about you managing your trade. It's about whether or not you can take the weight and take the emotional control from the trade and actually keep cool, keep level-headed during a time of more of an emotional sort of test. You can have all the plan done in the first place. It's whether or not you can actually control yourself in the moment of the trade. And I think in this example, I obviously failed to do that by minimizing my risk, etc., moving that stop down and stop down. I'm asking to be stopped out. I'm asking to throw away all the pre-trade analysis I did previously. I'm asking to miss my actual trade. And I feel like that's more of the emphasis on this trade. You really have to be okay, and you have to be content with you seeing your hard-earned money go up and down and not change your mentality that you once had. You have to stay stoic and stone-faced and uncaring, etc., while you're in the trade. And I feel like that's the most important part. And yeah,
that is absolutely true.
Previous trades also, we talked about on how I should be managing my trade better, and how I should be securing my risk better. I think this trade in particular, there was no excuse to manage my risk, as we literally had maybe a 7-point drop for me to move my stop loss. That is no excuse for me to move my stop loss. It was absolutely emotionally based.
That's and this is sort of what I'm like, going back to the data proven model. Remember what I said is they often do the second tap, the third tap, the three drives pattern to shake out weak shorts in this case.
Absolutely.
But the way you become a strong short is because you have the data proven model. You just see this bullshit. And you're like, yeah, I guess until they close over the fair value gap, until they close over this order block or break through the high, this could just be fucking nonsense. And it was. And then you learn to adjust and enter there. And like whenever you enter a trade, most people, they enter off greed. So they see the money that they can make. But as soon as they're entered and the price goes for them and then starts going away from them, from the green, they start thinking in fear. I have green, but I might be giving it up. Maybe I should exit. When they initially were perfectly fine to take on the risk that they put on.
Yeah.
But then all of a sudden, when it goes green and then it goes back, that risk is no longer tenable. And they have to adjust it, minimize it. We can't. You should remain greedy. And better, not greedy, optimistic that you could win the trade. And just, you said you were good with the risk. Leave it.
Yeah.
Even in that entry, which is maybe, let's say that's your entry and you like, which is sort of understandable. It inverted a fair value gap there a little bit. It swept the area. Okay. It's like two confirmation. It comes back. Leave the stop. You said the risk was good.
Absolutely.
So the risk is still good. Even if it gets hit, it's good.
Yeah, and
No
it's
reason
that.
for you to move it. If you move it now, the risk is different.
Yeah,
If you
it's
shorten it, maybe you get stopped out. If you widen it, now you're scared and you're not willing to get stopped out on a bad idea and just be wrong. And you have to walk both of those paths at the same time, which when you enter the trade, if you're doing it right, you already know. But then once the trade starts dancing, we all become little pussies. It's crazy. I mean, I've done it a bunch and cut early on a number of plays this week,
yeah,
even
it's
though it's
it's
been a nice green week. Same sort of thing. Coming from, is it gonna? I don't know. It's coming back sort of fast. It did hit that thing. You know what? I'm out. I'd stop me at break even. Oh, there it goes. Why did
yeah,
it
it's
push it
definitely
up?
that human tendency,
Yep.
to move it. But yeah, I think it was still a good trade. This sort of mentality is something that I have to remember, to be more aware of in the future, and I feel like this is something that we all have to monitor. We have to monitor ourselves, while in the trade, how you think, how you change your mind, how all of this pressure just you know uh, decides to malleate your plan in the first place. And that's a problem. We sort of have to look at ourselves, and there's no better way to look at ourselves than to watch the show, or maybe to support the show,
Absolutely.
or maybe to click the link in the
Absolutely.
bio, or maybe to hit a like button or a subscribe button, or listen. We don't discriminate on this channel. If you're here to watch, absolutely stay here and watch a couple episodes. We got some great episodes out there. But if you want to, go that extra mile, go support, go be you and be great. Absolutely hit that subscribe button and let us know, man. We do some social business and some stuff, don't we, Beach?
Absolutely, we do.
But listen,
Absolutely.
yeah,
Get you a top step account.
get yourself a TOPSTEP account, and hit us up on socials if you guys want to talk to us. And yeah, it's a great episode. We'll see you guys in the next episode. Definitely hit that like, subscribe, everything. And yeah, twice a week we'll be here.
Bang, bang.